Welcome back to the webinar series. So again, I am going to start another accounting standard. So far we have done few accounting standards, but in this session, 3 accounting standards will be covered: income tax standard, leasing standard, which is a new standard, and employee benefit standard. Those are little complex standards, but for your level, examiner will not test much more complex questions. Therefore, fundamentals of each and every standard we need to understand logically. When I say logically, some students will try to remember these things by reading 10, 15 times. But when you go to the exam, the content will be forgotten because of the pressure you have. Therefore, don't try to cram these things. Try to understand the logic behind each and every concept. These 3 standards require some logical approach to apply when you prepare financial statement. Right? Fine. We will start with income tax standard. This is very simple standard. Right? Moving after this, we will move into other standard. So LKAS 12, right? Even though you see IAS 12 in Sri Lanka, LKAS 12, right? This standard prescribe accounting treatment for what? Income taxes. How do we account income taxes? Accounting treatment will be explained in this standard. So here, standard talks about current and future tax consequences. Current and future tax consequences. From current tax, it will come current tax to your financial statement, profit and loss account and the other comprehensive income. From future tax, it will generate what? Deferred tax impact. But let me explain this standard in the board to give you overall idea. LKAS 12, income tax, right? This standard explain you prescribe accounting treatment for current tax and future tax. Right? Current tax and the future tax. There are 2 parts. Current tax and the future tax. Current tax means you calculate current tax like this. Very simple. You have profit before tax into tax rate. You have to calculate this profit before tax using tax law. Simple, no? Income tax. And you pay this to whom? Tax authorities. You pay for tax authorities, which is called current tax. Profit before tax you calculate, taxable profit. We would say taxable profit. Taxable profit into tax rate, and you pay, figure out it, calculate it and pay into tax authorities. Future tax, current tax and the future tax means you calculate here future tax payable or recoverable, receivable, recoverable in respect of temporary difference. Important part, future tax can be payable or recoverable on what? Temporary difference. Temporary difference. We identify this as what? Deferred tax. We identify this as what? Deferred tax. sorry, we identify this as deferred tax. Deferred tax, right? DT කියන්න ඔකට අපි. But your syllabus is not talking about deferred tax in detail. But they are talking about what? Current tax. But it is important to understand the concept behind deferred tax also, since they have touched this word, right? Deferred tax will arise because of a timing difference that we have discussed now. Future, it's a future tax concern, I will explain, right? Future tax payable or recoverable in respect of temporary difference. In respect of temporary difference, which is called deferred tax. Future temporary difference means your current asset, current carrying amount, sorry, not current asset, carrying amount will be difference from your tax base. May not be difference always, same, it will be difference. So there are two outcomes now here. Carrying amount can be higher than tax base, or carrying amount will be lower than tax base, right? If so, this is a temporary difference, right? Carrying amount minus, basically carrying amount minus, temporary difference means carrying amount minus tax base, right? So when you minus tax base from carrying amount, it can be, sometimes carrying amount can be higher than tax base, or sometimes tax base can be higher than carrying amount. I will take simple example to explain this. This is very simple, right? But this is little important to understand. Look at, let's take one simple example. You have a vehicle. You have a vehicle. You purchased this on 1st April 2015 for 10 million. And you depreciate over the period of 5 years. Lifetime, useful life. Let's say useful life. Five years. So when it's come to second year, at the end of second year, right? The net book value or carrying amount, let's say carrying amount of this asset, 2 years depreciation. So each and every year you depreciate, 5 years means 10 divided by 5, 2, right? 2, no? 2. At the end of second year, already 4 millions you have depreciated, 6 million is the carrying amount. That you can figure out easily, right? 4 million you already have charged to depreciation. Depreciation accumulated, depreciation 4 million. This is your accounting carrying amount. Accounting. But accounting carrying amount, tax base is different. Tax authorities will say this depreciation you are accounting, but for tax purpose we will not allow you to depreciate over the period of 5 years. We will allow only 4 years depreciation period. I don't know tax law, but let's say for tax purpose it's 4 years. If it is 4 years, tax base will be like this. End of second year. End of second year. 10 million minus now, not 5 years, no 4 years. 4 years means 1 year depreciation 2.5. 5 million will be depreciated, carrying amount. Tax base 5 million. 5 million. Here 4 million. Now carrying amount is higher. Tax base is higher. Carrying amount is lower. 4 million. Sorry, 6 million, other side. 6 million, here 5 million. Look at, it's come under this. Accounting carrying amount 6 million, tax base 5 million. Carrying amount, tax written down value basically. This is accounting written down value 6 million, tax written down value 5 million. What is the tax impact on this? If it is an asset, asset will generate future economic benefits. That's the definition of asset, no? Future economic benefits. On that future economic benefits, you have to pay tax. You have to pay tax. From asset, future economic benefits, how do you realize? By selling that asset. Let's say I have a vehicle. This is a motor vehicle. I can realize the economic benefit by selling that vehicle or by using that vehicle in my normal business. When I use that in my normal business for business activities, that will generate economic benefit. So in next 3 years, I can realize 6 million as what? Economic benefit. Your carrying amount will be realized. No, that's why you depreciate. ඔයාගේ carrying amount එක තමයි realize කරන්න ඉස්සර අවුරුදු 3 Understand? For accounting purpose, you can realize 6 million in future. For tax purpose, maximum you can realize how much? 5 million. එහෙනම් accounting වල economic benefit එක වැඩි realize කරගන්න තියෙන tax එකට වඩා වැඩිපුර economic benefits realize වෙනවා කියන්නේ ඉස්සරහදී වැඩි කොටසක් you have to pay more tax. එහෙනම් මෙතන more tax liability එකක් කියනවා. Taxable අපි කියන මේකට taxable temporary difference. You have to pay tax on this. Other side, deductible temporary difference. Temporary difference. Here you have a liability to pay tax. හරිනේ? You are liable to pay tax on 1 million, more than 1 million. ඒ කියන්නේ මිලියන 6 minus මිලියන 5 මිලියන 1කට වැඩිපුර tax එකක් ගෙවන්න ඕනේ. From accounting perspective, you will realize 5 million. From tax perspective, accounting perspective 6 million. Difference is 1 million. එහෙනම් මිලියන 1ක් වැඩිපුර economic benefits තියෙන මොකක්කටද? accounting වල. එහෙනම් accounting purpose එකට tax අපිට ගෙවන්න වෙනවා 1 million වැඩිපුර in future. Future tax consequences. මේක අදද වෙන්නේ? නෑ ඉස්සරහදී වැඩිපුර tax එකක් ගෙවන එක අද books වල record කරගන්නවා liability එකක් විදියට. මේක අනිත් පැත්තට උනොත් ඒක මොකද්ද? asset එකක්. That is what the deferred tax means. In short, other side. දැන් මේ වෙනකල් ඔයා වැඩිපුර කොටසක් P&L එකට දාලා tax purpose. වැඩිපුර ගාණක් profit එකෙන් අඩු කරලා. here depreciation කීයද? 5ක් අඩු කරලා මෙතන. 5ක් අඩු කරලා. මෙතන අඩු කරලා තියෙන depreciation accumulated depreciation 4යි. වැඩිපුර අඩු කරා කියන්නේ profit එක when you deduct more depreciation your profit will be මොකද වෙන්නේ? වැඩිපුර අඩු කරා කියන්නේ වැඩිපුර tax ගෙවලද අඩුවෙන් tax ගෙවලද? අඩුවෙන් tax ගෙවලා තියෙන්නේ. මෙතන අඩුවෙන් tax ගෙවලා තියෙන්නේ නේ. එයි වැඩිපුර depreciate කරනවා කියන්නේ profit එක අඩු වෙනවා. අඩුවෙන් tax ගෙවලා තියෙන්නේ. මෙතන ඇත්තටම ගෙවලා තියෙන tax එක අඩු වෙන්නේ දැන්. accounting purpose tax calculate කරොත් tax base එකට වඩා අඩුවෙන් තමයි depreciate charge කරලා තියෙන්නේ. අඩුවෙන් depreciate charge කරලා තියෙන්නේ මෙතන. අඩුවෙන් charge කරලා තියෙනවා කියන්නේ වැඩිපුර tax එකක් ගෙවන්න වෙනවා ඉස්සරහදී. liability. ඒකට අපි කියනවා deferred tax. This will not be tested, but it is important to understand. Right? In short, carrying amount එක accounting purpose වැඩි හින්දා ඉස්සරහදී economic benefit වැඩිපුර realize වෙන්න තියෙනවා. economic benefits වලට you have to pay tax. Right? දැන් වැඩිපුර ගෙවන tax එක අපි හොයන්නේ 6 minus 5 million 1 million into tax rate. Let's say 28%. So 0.28 million is the deferred tax impact. This will not pay to whom? Income tax department. Only current tax will be paid. This is only accounting adjustment. Accounting adjustment. that accounting treatment is not required, but this is only accounting adjustment, not a payment to inland revenue. Only current tax will be paid to inland revenue. Fine. It is important to understand this also, that's why I explain, but examiner will not touch on that in detail. Don't worry, but current tax is important. Coming back to the presentation, that's all about deferred tax. Definitions are there. Tax accounting profit means net profit or loss for the period before deducting tax expense. Taxable profit or taxable loss means profit for a period determined in accordance with what? Rules established by tax authorities, right? Tax expense means aggregate amount deducted in determination of net profit or loss for the period in respect of current tax or deferred tax. Current tax means amount of income tax payable in respect of taxable profit for a period. So, current tax will be paid to whom? Inland Revenue Department. So, current tax, amount of tax payable in respect of taxable profit that we have discussed, taxable profit or loss into tax rate. The double entry for this is what? Debit expenses, credit tax liability. Sometimes it will come to OCI also, but that is not much more important. For ULL, it is important to understand the first double entry. P&L debit, income tax credit. This is important. How to adjust under or over provision for current tax. This is one adjustment you have done where? In your A-level exam. Use that A-level exam knowledge to answer this question. Prior to that, we will go through this slide. The total amount of tax paid to tax authorities may differ from amount expected to be paid. Correct? No? You will do estimate, right? You will estimate tax figure and you will record that as a provision in your books. Your expense debit, your payable amount credit. But actual payment will be different when you calculate based on tax rules and regulations. When you make the payment, there can be under or over provisions. How to adjust that under or provision in financial statement? That is what we are going to discuss here, right? Where more tax is actually paid than the liability in the financial statement, which means you have 100 rupees as a liability, but you paid actually 150. Then you have what? Under provision. Your actual liability 150, you have provided only 100, which means extra 50 you need to provide it. You need to pay. That you will identify as what? Under provision. Then under provision is adjusted to next year's tax charge to ensure that the full amount of tax is charged to profit or loss. Right? Under provision is added to next year's tax charge to ensure that full amount of tax is charged to profit and loss account. Right? Under provision will add to next year's tax charge. Where the less actual paid than liability. Liability oda aduwen pay karala thiyenne nan financial statement there is over provision. Which means, let's say you have provided, there is a provision of 100, but you have paid 80, which means you have provided over amount, which is over provision. Look at this example. In 2008, Darton company had taxable profit of 120 million. In the previous year, 2007, income tax on income tax. In the previous year, 2007, income tax on 2007 profit had been estimated 30 million. Right? 30 million is the income tax figure. The corporate tax rate 28%. Sorry, 28%. Calculate tax payable and the charge for 2008 if tax due on 2007 profit was subsequently agreed with tax authorities to 35,000, 35 million and 25 million. Very simple. Read this question again. First of all, you need to calculate the tax liability. current tax liability. Right. Current tax liability, if you look at 100 taxable profit 120 million. 120 million, let's say 120,000 from thousands, 28% is the tax rate. So 120,000 into 28%, right? It's 120,000 into 28%, 33,600. This is the actual tax liability in 2008. Now the question is, if last year's actual tax authorities has finalized tax figure to 35 million. Earlier it was 30,000 is the provision. Now it has revised to 35,000. Now this year charged 33,600. The question is how much you charge to P&L in 2008. So there's a over provision or under provision. Actual would be 35,000, but they have recognized 30,000. 30,000, I am talking in thousands, but those are millions, right? So then 5,000 under provision. You have to add that to this year's number and provide in the financial statement, which means this year charge would be 38,600. 33,600 plus 5,000, 38,600, right? This is because of what? Under provision. Under provision, simple. Under provision, right? Under provision. The second part, 30,000 is the still provision and 25,000, 25 million basically, right? Here there is a over provision. Actual liability according to tax authority 25,000. Therefore, in second scenario, 33,600 minus 5,000, right? 5,000, 28,600. 28,600 would be the P&L figure. Here you have over provision, right? This is over provision. This is under provision. This is over provision. So in both cases you charge 38,600 and 28,600. Very simple questions. So when it comes to income tax, under and over provision adjustment also important to understand. Tax losses, simple standard, much more complex areas they have not tested, right, included in the study pack itself. In some jurisdictions, tax losses can be carried forward to recover current tax of previous period. The carryback tax loss in Sri Lanka is not allowed, right? Losses not allowed in Sri Lanka. Ape Lankawe ehama carried forward karana baya. That's simple thing, right? Fine. That's all about actually income tax. Since they are not talking about deferred tax, what is important areas to understand? How do we calculate current tax based on taxable profit into tax rate? Taxable profit is not the accounting profit. Taxable profit means profit you calculate according to tax law, and the double entry is debit P&L, credit liability, and how to deal with under and over provision. Simple, right? In addition to that, I already explained the deferred tax concept in the board, right? But you will understand deferred tax in detail when it's come to next level. For your level, calculations will not be tested, but understanding is important when it's come to LKAS 12, right? Fine, okay, done. Next important standard, employee benefit, right? Employee benefit. So employee benefit, as employees, when they deliver their service to employer, right? Employer, what benefits they will arise? They will enjoy or entertain or eligible. All the benefits that they receive will be identified in the standard, right? All the benefits that employee will get from employer will be categorized into 4 areas for accounting purpose. Right? Before I come to these 4 areas, all the benefits employee receive from employer for rendering service will be classified into these 4 areas. The accounting treatment for these 4 areas will be explained in where? LKAS 19. Employee benefits, short and sweet, simple. Right? Fine. Before that, understand this concept. Why LKAS 19 is required? There's a liability when employee provide service in exchange for employee benefits to be paid in future. When you deliver your service to whom? Employer, when you deliver your service to employer as employee, employer has liability to pay for that service. It's a transaction. And liability, on other side, it is what? Expense in the organization. Right? You have to recognize both expense and the liability in your books of accounts. Right? In this image, you can see employee service to employer. For that, employer paying some money, consideration, benefit to employee. All these employee benefits, we can classify it into these 4 categories. Some of them will be what? Short-term benefits. Some of them will be post-employment benefits. Some of them will be other long-term employee benefit. Some of them will be termination benefits. Employee කෙනෙකුට ලැබෙන සියලුම benefits category 4කට කැඩෙනවා. මෙන්න මේ category 4ට. Why? For accounting purpose. LKAS 19 prescribe accounting treatment for all kind of benefits. Very simple. Right? We'll take one by one. These are the examples. Short-term employment benefit. Short-term employment benefit, post-employment benefit, other long-term employment benefit, and termination benefit. Examples are in this table. Before we go through this example, we'll take the definition of each and every category and we'll come back to these examples. Right? Fine. Look at short-term employee benefit. Short-term employee benefit means employee benefits other than termination benefits. Termination benefit හැරුණකොට other than employee benefit, other than termination benefit that are expected to be settled. මේවා settle කරන්න ඕනි before 12 months period after end of annual reporting period in which employee rendered the service, render the related service. Let's say I have delivered my service till 31st March 2020. That is the end of financial reporting period. So that cost for that service must be settled within another 12 months period. Employer within 12 months period that service cost should have been settled. If so, we identify that as what? Short-term employee benefit. Clear? Fine. What are the examples? Look at these. Wages and salaries, social security contributions, examples. Paid annual leaves, paid sick leaves, paid maternity leave and maternity leaves basically. All these things should be settled within 12 months period after the reporting period end. මගේ salary ටික, sick leave ටික, annual leave ටික, maternity leave within 12 months time period after the reporting period must be settled. Those things will identify as what? Short-term employment benefit. එහෙනම් වගේ salary එක මොකද්ද? Short-term employment. Sick leave, paid annual leave, paid sick leave, paid maternity leave, all these things are what? Short-term benefit. Then other category, post-employment benefit. Look at this definition. Post-employment benefit itself explain what? After employment. ඒකනේ කියන්නේ post employment කියන්නේ තවදුරටත් තව employee කෙනෙක් නෙවෙයි. Short term employee benefit now still you are an employee. Post employment benefit means you are not an employee. Post means that when you terminate, when you not I can't say terminate, when you complete your service, employment, when you complete your employment, if you receive any benefit, those are what? Post employment benefit. Look at this. employee benefit other than termination benefit and short term employee benefit. ඒවා termination benefit උත් නෙමෙයි, short term employment benefit නෙමෙයි, that are payable after completion of the employment. ඔයාගේ employment ඉවර වුණාම හම්බෙන benefit මොනවද? termination benefit. මොනවද ඔයාට employment ඉවර වුණාම හම්බෙන්නේ? මෙන්න pension එක හම්බෙනවා after employment. employee කෙනෙක් විදියට ඉදි හම්බෙනවද? නැහැ. post employment medical care, sometimes medical insurance after employment. Right? post employee insurance, සමහරට insurance එකක් හම්බෙන්න පුළුවන්. EPF ETF. ඔයාට දැන් ගන්න පුළුවන් EPF ETF. You are not eligible for EPF and EPF claim right now. Once you complete your employment, you can collect that money from employment EPF ETF board. And gratuity. Gratuity also you will receive once you complete your employment. That's why we call it as what? Post employment benefits. Then other long employment benefit. These two categories are very straightforward. You can easily understand. But other long term employment benefit. Look at this. Other long term employment benefit means all employee benefit other than short term employment benefit that we have discussed, post employment benefits and termination benefit. And there are 4 categories no. Other than these 3 categories, මොන හරි benefit එකක් හම්බ වෙනවා නම් ඒ ඔක්කොම මොනවද? Other long term employment benefit. ඒක short term එකකුත් නෙමෙයි, post employment උත් නෙමෙයි, termination උත් නෙමෙයි. එහෙම හම්බ වෙන ඔක්කොම දේවල් මොනවද? Other long term employment benefit. Example, long term paid absenteeism, jubilee for other long service benefits, which means silver jubilee, gold jubilee කියලා තියෙනවානේ. අවුරුදු 25 සම්පූර්ණවම මෙච්චර ගණක් employees ලට ගෙවනවා. Those are what? Not post employment, not short term employment, not termination. Still you are an employee, but you will receive some consideration for your service. Deferred remuneration, long term disability benefit. You have faced an accident, therefore you can't work, but employers paying money. So long term employment benefit. Termination benefit. Termination benefit means employee benefit provided in exchange for termination of employees as a result of entity's decision to terminate or entity's decision to accept, employee's decision to accept offer benefit exchange for termination of employment. Nowadays you can see these termination benefits, right? Here you employee terminate the employment. This can be a result of 2 things. Entity decided to terminate your employment, or employee is decision to accept the offer or benefit in exchange of termination employment. අර VRS එකම කියලා කියන්නේ දැන් කොවිඩ් කාලේ sometimes companies are facing to cash flows. Because of that they can't pay employee salaries. Therefore they introduce voluntary retirement scheme, and you can accept that and you can get some benefit and go out from the organization. Those are what? Termination benefit. Which means those are not post employment. Terminate employment එක නතර කරා forcefully. Thereafter you will receive some consideration. Those will be termination benefits. Now you are very clear about these 4. Short term within 12 months, post employment after employment. Termination means once you terminate your employment, any benefit other than this short term, post employment and termination will come under what? Other long term employment benefit. Right? We will discuss one by one. Look at short term employment benefit. Short term employment benefit includes all following benefits. මොනවද? Wages, salaries, social security contribution, paid annual leave, sick leave, profit sharing bonus plan, and non-monetary benefits such as medical care, housing, car rental, everything. These are what? Short employment benefit which are to be settled by employer within 12 months period after reporting period. How do we account short term employment benefit? This is LKAS 19. Entity shall recognize short term employee benefit as an expense to profit or loss account. Double entry, debit expense for employee benefit and credit liability or accrued expense. Debit expense, credit liability. That's how you account what? Short term employee benefit. Short term employee benefit. LKAS 19 classified short term employee benefit as non-accumulating and accumulating paid absenteeism, very important, can be tested. Some short-term employment benefit can be non-accumulated absenteeism, paid absenteeism. Some of them can be accumulating paid absenteeism. Example, non-accumulated absenteeism means do not carry forward if unused in current period. You can't carry it forward. Example, maternity leave. This year I didn't get maternity leave, therefore I want next year. No, you can't carry forward. In the event of pregnancy, you will take what? Maternity leave. You can't carry forward. If so, what is the accounting treatment? Expense recognized when absence occur. When you go for maternity leave, you will recognize that as what? Expense to the P&L. Carried forward to next year means sometime some employee will allow unused paid holidays to carry it forward. Let's say you are eligible for annual leave this year or sick leave. Those things you can carry forward to next year. If so, we identify those as what? Accumulating paid absenteeism. Accounting treatment is what? Expense is recognized when employee renders service which increase their entitlement to paid absenteeism. For the period you render service, you identify it as what? Expense. This is the example, right? Look at. A company gives its employees an annual entitlement to paid holidays, right? Paid holidays. If there is any unused leave at the end of the year, leaves paid holidays, right? Employee are entitled to carry it forward unused leaves up to 12 months. Let's say till December 2019, you have unused leaves of 5. Those 5 leaves you can carry it forward till end of December 2020 for next 12 months. At the end of 2019, the company carried forward 50 days of unused leave. Employees are paid 100,000 per day. Employees are paid 100,000 per days. The question is this: state the required accounting for unused holidays carried forward. Very simple, right? How many days are there? The short-term accumulating compensated absenteeism should be recognized as an expense in the year when entitlement is arise. That is in 2019. So you have rendered the service for 2019. Therefore, this should have been recognized where? In the financial statement of 2019, which with the corresponding accruals, right? The amount is how much? The amount would be 50 unused holiday multiplied by daily salary of 100,000, which means 5 million should be recognized in the financial statement of 2019. Even you will enjoy, you will take those in 2020, you will recognize they are in 2019 financial statement. Why? You have delivered that service for 2019. This is the question on sick leave, right? Another interpretation is there for this. Look at this. Negambo Construction Company has 100 employees. The company has 100 employees. Each is entitled for 5 working days. 5 working days of paid sick leave. ඒ හැමෝටම 5 working days sick leave එකක් තියෙනවා each calendar year. The unused sick leave can be carried forward to next year. Whatever remaining unused leaves you can carry it forward to next year. Sick leave is taken on last in first out basis, which means, let's say, let me explain this, right? In 2019, let's say 2019 you have 5 days sick leave. If there is any unused sick leave that you can carry it forward to next year. This is 2019, this is 2020. This year also you have 5 days sick leave. 5 days sick leave. right? So what will happen? FIFO means, its question says LIFO, which means you can carry it forward this 2 to 2020, but last in first out. This is last in first out. So this is last in. You have 7 days, no 5. This 2 plus 5. So last in means this 2, 5. So last in first out. This 5 is the last in. So 5 you have to utilize first. Once you utilize this 5, then you can you are eligible for this 2. Last in first out. So to enjoy this 2 leave, you have to first incur this 5. Once you enjoy this 5 days 6 leave, then you can go for what? Another 2 days. That's what the question says. Look at now. At the end, at the 31st December 2008, average unused entitlement is 2 days per employee. Unused days किया था 2 days per employee. There's අට ඉවර වෙනකොට තියෙනවා employees ලා 100න් employees ලා 100ට unused leave දෙකක් කියලා තමයි කියන්නේ. Negombo Construction expect next year 92 will take 5-day leaves or less than that. 92 will take 5 days or less than that. If they take 5 days or less than that, the carried forward leaves will not required. If you take more than 5, only these carried forward sick leaves will be used. Remaining 8 will take average 6.5 days. You are entitled for 5 days, but balance will take 6.5, which means extra 1.5 days into 8. Extra 1.5 into 8, which means 12 days. You will utilize from carried forward balance. State require accounting for sick leave for the year ended 31st December 2018. At the end of December 2018, 31st December 2018, right? Even though you have 2 carried forward leaves for all employees, right? Only 8 employees will enjoy more than 5 days, which is 6.5. Which means even from carried forward leaves you required only 1.5 days. 1.5 days you required for 8 employees. 1.5 into 8, 12. So only 12 days you will account when it's come to 31st March 2018 as accrued sick leave, right? For this year, you will take 12 days. 12 days into what? Per day cost. Per day cost has not been given, but if you have that per day cost, 12 days into per day cost will be the cost that you should recognize at the end of 31st December 2018. Why? You have delivered this service during 2018, right? Therefore, you have to recognize this in 2018 books based on the expectation that you have, right? Estimated figure. Profit sharing bonus plan, which means profit sharing bonus plan means sometimes when you hit the targets, company is eligible for bonus. Employees are eligible for bonus sometimes. Companies say, if you hit the budget, from the profit, this much of percentage will declare as what? Bonus to employees, right? So according to that, if you look at this slide, profit share bonus payable within 12 months after end of accounting period should be recognized as what? As an expense, and liability will when the entity has present obligation to pay them. When employer has no real option but to pay, right? Since you have given a promise, you have declared saying that we will pay like this, you have bonus policy. According to that, if you hit the targets, you have to pay that, right? You have present obligation to pay. When you identify that, when you meet that present obligation, you have to recognize that liability in the books of account. This will usually be when employee recognize the profit or other performance achievement to which the profit share bonus relates. The measurement of liability reflect the possibility that some employees may leave without receiving the bonus. Right? If you don't pay this, sometimes employee will leave from the organization. Therefore, according to the policy, you have to pay bonus. For that, you have to recognize liability. This is the example. Candy trading company runs profit sharing plan. Under the plan, if net profit for the year ended 31st December 2018 exceed the stated figure, the employees have been employed by Candy, who have employed by Candy over 12 months will receive 1% net profit figure. If you employ more than 12 months, 1% bonus will be for 1% bonus will be employees are eligible. At the start of 2008, Candy had 30 employees. Patangan hitiya year එක 30 employees la. All 30 had been employed by Candy over 1 year. 30 me hitiya, but during year 2008, 5 these employees were replaced by new employees. 30 hitiyata 5 employees la replace kara. Therefore, 12 months completed employees, how much? 30 minus 5, 25. Right? The net profit target was met. Net profit target එකත් met කරලා දිනවා. ඒ හින්දා 25% into 1. 25% into 1 means 25 employees, 0.1, 0.25. Right? 25% into 1. Sorry, 25 employees into 1%, 0.25% on the net profit should be the profit sharing bonus plan. Net profit figure has not been given, but you have to apply this 0.25% on net profit and calculate the amount that you need to recognize in your balance sheet and the P&L as expense. That's all about short-term employment benefit. Now post-employment benefit. Post-employment benefit is little important to understand, and sometimes calculations are little complex, but in your level, calculations will not be tested. Right? Under your level, calculations will not be tested. Look at this. Post-employment benefit that we have identified in our previous slide. Post-employment benefit means after completing employment, you are eligible for some benefits. Gratuity, EPF, ETF, pension kind of things. Right? In this slide, that has properly explained. Post-employment benefit includes items such as various pension, retirement benefit, post-employment benefit, life insurance, post-employment medical care kind of things. Right? Post-employment benefit can be divided into two categories. One is defined contribution plan, defined benefit plan. Look at this board. So then you will easily understand. Post-employment benefits. Post-employment benefits. There are two categories. Employment benefit. The first category is defined contribution plan. Define, don't worry, I will explain. Defined contribution plan. Other one is defined benefit plan. Defined benefit plan. Look at now slide. There are two basic types of post-employment benefit, defined contribution plan and the defined benefit plan. Defined contribution plan. Defined contribution plan is very simple to understand, right? Defined contribution plan plan are post-employment benefit plans under which entity pays fixed contribution into separate fund and will no legal or constructive obligation to pay further consideration if the fund does not hold sufficient asset to pay all employees benefit relating to employee service or current period of service. How to account defined contribution plan? Debit employee expense and credit liability or accrued expense, right? That is defined contribution plan. Let me explain in the board. Defined contribution plan means according to that definition, you pay fixed contribution. To where? To a plan. To a plan. Right? From that, employee will receive variable benefit. Variable benefit. I know at your level you will not understand this without an example. If I give you a solid example, you will identify the definition of defined contribution plan. Look at EPF, EPF and ETF. ETF. Post-employment benefit for EPF and ETF, you are eligible after employment. Post-employment benefit, this satisfying. Is it a fixed contribution? Yes. 8% from employer, 12% from employer, 8% from employee. For EPF, this is for EPF. For ETF, 3% from employee. It's a fixed contribution. Correct? No? Fixed contribution. To a plan. Where is the plan? Plan එකක් තියෙනවා. Plan එකට fixed contribution. You are given fixed contribution. කවුද දෙන්නේ? Employer and employee both. Right? From this plan, after employment, first employment, you will receive variable benefit. What do you mean by variable benefit? Right? This will be given to whom? EPF board. මොකක්ද අපි එකට කියන්නේ? Provident fund. Fund එකක් මේක in Sri Lanka. Fund එකනේ කියවන්නේ. Is the fund is the plan. Right? EPF fund and ETF fund. This is under government. This plan is under government. Employer and employee both are giving their fixed contribution. Right? මේ මාසේ 108යි ලබන මාසේ 110යි ඊළඟ මාසේ 115යි එහෙම දානද නැහැ. Fixed contribution to a plan. That's the ETF EPF fund. From that you will receive the paid amount. No, this will be variable with interest. Contribution plus interest you will receive. Contribution plus interest will be what? Variable benefit. Right? Variable benefit. This is what the defined contribution plan means. Employer and employee give fixed contribution. From that to a plan which is EPF ETF fund. From that you will receive what? Variable benefit, contribution plus interest. Most interesting thing is this. Here, once you contribute, we are talking about employer basically, right? This 12% and 3%. Once you contribute to this fund, you are not further responsible on that payment. At any given point, employee cannot come and ask from employer. You can't come and ask from employer, give me the contribution. No, you have to go and ask from whom? Fund. Therefore, company is not responsible once you contribute to this plan. The benefit depends on the performance of this fund. Government එක කොහෙද මේවා ඉන්වෙස්ට් කරන්නේ? අපි දාන සල්ලි ටික government එක ඉන්වෙස්ට් කරනකොට share market එකේ එහෙම. ඒ ඉන්වෙස්ට් කරන money වලින් අපිට කෑල්ලක් දෙනවා. මේ තියෙන interest දීලා දෙන්නේ ඒක. This will be depends on the performance of this plan. මේක කොහේ හරි වැරදි තැනක ඉන්වෙස්ට් කරලා government එකට ගෙවා ගන්න බැරි වුණොත් employee වෙන ඔයාට ගිහිල්ලා employerට කියන්න බෑ මම සර්විස් කරාවට අවුරුදු 50ක් දැන් මගේ EPF ETF එක දෙන්න. Employer කියයි I am no longer liable mister. Why? Because I have given my contribution to the fund. This plan is not belongs to me. It's not my asset. It's held by government. You go and negotiate with government. I can't do anything. Therefore, in my books, this is my double entry. Debit expense, credit liability. This liability will exist till I contribute money to where? This fund. Once I pay for this fund, my liability will be fulfilled. Understand? Which is called defined contribution plan. On other side, you have another post-employment benefit plan, right? Defined benefit plan. What do you mean by defined benefit plan? Understanding that also little important. Look at this example before we come to define benefit plan. On defined contribution plan, there's an example, right? What is that example? Here, this slide, defined contribution, it's a fixed contribution to pension plan and you will receive variable benefit that depends on the performance of the plan, right? Fine. Example, Pacific Plants Limited contribute 5% of employees' salaries into a post-employment plan each year. Salaries amounted to 8 million in the year ended 31st March 2004 and the company had paid 350,000 into plan by the reporting date, right? What is that journal entry they are asking? Journal entry is what? Salary cost how much? 5% of 8,400,000 debit. Credit cash, only they have paid 350,000. Another 50,000 to be paid for pension scheme, which is a credit liability. That's how you account for defined contribution plan. Defined benefit plan is not that simple to understand, right? Here it is like this. It is like this. Let me explain in the board before I come to the screen, right? Here it's a fixed contribution, but when it's come to defined benefit plan, it is variable contribution. Again to a plan, asset, plan asset, right? From this you will pay what? Fixed contribution, fixed benefit, sorry. There's a fixed benefit, other side of it. Fixed benefit. Understand the difference. If it is defined contribution plan, fixed contribution. If it is defined benefit plan, variable contribution. If it is fixed defined contribution plan, or in both defined contribution plan and defined benefit plan, there's a plan. But this plan out of the organization, this plan within the organization, this is, they are in company, maintained by company. By company. That's the difference. This is maintained by someone else. Once you paid your liability to this plan, that you have fulfilled your liability. Thereafter, no obligation. But since this is maintained by your organization, you have a obligation to settle this fixed benefit. Here you don't have obligation to settle this variable benefit. Why? Because this plan is out of your control. Since this is within your control, you have an obligation to settle this. Understand in this way. Make a EPF board eකට pay කරන්න government එකට. So then the transaction between employee and government will be there here. මෙතන තියෙන ගනුදෙනුව government එකයි employee. මෙතන එහෙම නැහැ. මේක pay කරන්න external කෙනෙකුට නෙවෙයි. ඔයා ගාවමයි මේ asset එක තියෙන්නේ. ඒ හින්දා this fixed benefit will be settled by employer here by this fund. Understand the difference? එහෙම කිව්වත් තේරෙන්නේ නැත්නම් example එක තමයි gratuity. Gratuity. Why? It's gratuity come under this definition. It's fixed benefit. Fixed benefit means last month's salary divided by number of years is the amount you pay. It's a fixed amount, not a variable amount. How do you calculate gratuity? Last month's salary, half of that salary into number of years you worked. If you work more than 5 years only, if it is less than 5 years, you are not eligible for this. If you work more than 5 years, last month's salary into number of years is the gratuity amount. It's a fixed amount. To pay this fixed amount, let's say you have 100 employees in your organization. හිතන්න 100 employees ලා ඉන්නවා. 100 employees ලා දැන් අවුරුදු 5 සම්පූර්ණ කරලා ඉවරයි. At any given point, employee can be left from the organization. If so, you have to pay gratuity for that. Therefore, to meet that liability, you have to recognize what? Liability. Right? Define benefit obligation you have to recognize to fulfill this liability. මෙතන වාට pay කරන්න liability එකක් තියෙන obligation එක. හැබැයි මෙතන නැහැ. මෙතන pay කරන්න කවුද? EPF board එක. But here you have an obligation. Understand? gratuity එක pay කරන්න දැන් gratuity එක employee යනකොට දෙන්න ඕනි. ඒක ඔයා pay කරන්න. Therefore you have an obligation. Therefore to meet this obligation in future, this will pay in future. Maybe in 2030, 2040, 50. අනාගතේ දවසක. අද ඉන්න employees ලට obligation. Right? Today you have number of employees. For them you are liable to pay gratuity in when they complete their employment. For that today you recognize liability. We identify it as what? Defined benefit obligation. Benefit obligation. Obligation. කොහොමද මේක measure කරන්නේ? You can't do that. There are professional valuers. Actuarial valuer කෙනෙක් ඉන්නවා. Actuarial valuer. Right? Chartered accountants can't do this. Actuarial valuer කියනවා අහනවා මේ ප්‍රශ්න ටික. How many employees are there? What is the age distribution of that cadre? What is the turnover ratio? What is the employment growth rate? Sorry, salary incremental rate. එයා information ටික අහලා formula එකකට දාලා ඔයාට දෙනවා. Look here employer, this is the obligation you have right now at the end of this year. හිතන්නවත් එපා කොහොමද calculate කරන්න කියලා මේ stage එකේ. In future you will do it. Even in future levels you will not do that calculation. Only professional valuers will do that calculation and give you the liability. දැන් තියනවා කියලා හිතන්න ඔයාගේ මෙයාගේ calculation එක 5 million, sorry 50 million. Professional valuer says fixed benefit මේල pay කරන්න ගන්න හැබැයි obligation එක එහෙම calculate කරන්න බෑනේ. That's a way of calculating it. This defined benefit obligation 50 million at the end of 31st March 2020. Why you have 100 employees? 400 employees. එයාලා ඉන්නේ මෙන්න මේ age වල. Therefore එයාලා විශ්‍රාම ගියොත් මෙන්න මේ කාලෙදී ඔයාට මෙන්න මෙච්චර ගාණක් ගෙවන්න වෙයි ඒ කාලවලදී. Therefore in today's book you have to recognize the liability how much? 50 million. Fair no? Past event. You have a present obligation to settle in future. Provision. Gratuity provision. LKAS 37. They have delivered the service in past. Today you have a present obligation to settle This liability, this is legal obligation. Constructive legal obligation. This is legal obligation. Gratuity is a law, act passed by the parliament. Therefore, this is a legal obligation according to LKAS 37. You have to make this provision. That calculation you can't do, actuarial valuer will do it. He will give you 50 million. The problem is this, to pay 50 million, you should have what? Money. That's why you contribute that to a plan. ඔයා 50 million pay කරන්න දැන්. ඒ වෙලාවේ pay කරනකොට සල්ලි නෑ. දැන් ඔයා හින්දා මොකද කරන්නේ? ටික ටික කොහරි invest කරලා තියෙනවා. Your investment may be in fixed deposit. Your investment in fixed deposit. That's the plan. මෙතන නම් මොකද? EPF fund out of your control. This is fixed deposit. You maintain this. But contribution will be variable. There is no hard and fast rule. ඔයාට හිතෙන ගණන් දාන්න මේ FD එකට. Here you have 40 million in your FD. During different time intervals on a regular basis, you have contributed to this fixed deposit 40 million. Now you have to meet 50 million obligation. To meet 50 million obligation, you have 40 million asset. Right? That can be. The net will be recognized where? This net will be recognized your balance sheet. Liability 10 million. 50 million minus 40 million. This 10 million will be recognized in your balance sheet liability, saying that employee provision for gratuity. Right? Employment benefit. Right? Clear no? Actually value දුන්න million 50k කියලා liability ඔයගේ asset එක තියෙන කීයද? 40 million. Difference will be recognized where? In balance sheet. Clear no? Fine. The last question. If employee come and seek, let's say this calculation comes around 4 million. මෙයාට අපි ගෙවන්න 4 million. හැබැයි අපේ 4 million නෑ fund එකේ. Fixed deposit එක තියෙන්නේ 3 million. Let's say example. So balance 1 million you have to pay in your hand. You can't say, look here employee, in my FD I have 3 million. Even though calculation comes for 4 million, I can't pay 4 million since I have 3 million. No. Act says, this is the law. Half last month's salary into number of years. 4 million නම් 4 million. ඔයා මේක තියාගෙන හිටියත් නැතත් you must pay 4 million. Here you can say, look here employee, I have given to government EPF fund, you deal with government and take it. You don't come and cry on me, cry in front of me. Here you can't say, I have given to fixed deposit, therefore you claim it from there. No. Employee will come to you. You are responsible to pay this fixed benefit. To meet that benefit, you will maintain the plan asset. That's fine. But here, employee will not come to you. He will go to plan. From that, you will get variable return. But here, fixed return you will get. That's fine. Clear. That's the difference between these two. There are two post-employment benefit, defined contribution plan and the defined benefit plan. Right? One last thing. This is an asset. This is a liability. Obligation is a liability, no? To meet this liability, you maintain this asset, 40 million. Therefore, you have to measure fair value of this asset. Fair value. According to SLFRS 13. ඔයා මේ ස්ටෑන්ඩඩ් එක දන්නේ නැහැ බය වෙන්න එපා. ඉස්සරහදී ඉගෙන ගයි. මෙන්න මේ ස්ටෑන්ඩඩ් එක කියන කොහොමද fair value එකක් measure කරන්න කියලා. ඒකට අනුව තමයි මේ 40 million fair value එක කියලා ගන්න ඕනේ. Here 50 million means present value of the obligation. Present value of future obligation and the fair value of that asset you have to compare together and net will be recognized where? In the balance sheet. Understand? That's the difference between these two. So, defined contribution plan example EPF and ETF. Defined benefit plan example is what? Gratuity. There are nice complex calculations, but those calculations are not relevant for your level. Understanding is enough. Understanding is important for your exams. Examiner can test, especially variable and fixed contribution story and how do we account for this. That understanding is enough, right? Fine, done. Coming back to the slide. Read this slide now since you have understanding. Defined benefit plan. Defined benefit, in this case, defined benefit plan, size of the post-employment benefit is fixed and the employer pay contribution into the plan. Size, the benefit is fixed, where which are invested. The size of the contribution is set at an amount that expect to earn enough investment return to meet the obligation to pay post-employment, which means to meet that post-employment obligation, you maintain one asset. To that you do contribution. If the asset, that contribution is variable. If the funds insufficient, the employee will require to make additional contribution into the fund to make the expected shortfalls. Very important. If the fund that are there in the fixed deposit in the asset to meet that liability is not enough, at the claiming point you have to pay in your hand. You have to pay some extra money, right? Excess of whatever required to pay post-employment benefit, the employer may allow to take contribution holiday. ඔයාගේ plan asset එකේ වැඩිපුර සල්ලි තියෙනවා නම් contribute නොකර හිටිය එක කාලයක්. Which means let's say your obligation 50 million, you have a 70 million asset in fixed deposit. So then since you have 20 million extra, you can avoid contribution to the funds for a shorter period, right? Finally, you can understand it's a variable contribution to pension plan from which you will take what? Fixed benefit, right? Fine. So that's the end of LKAS 19. So we have discussed income tax standard and employee benefit standard in this session, right? Fine. So we'll meet up in next session with some other accounting standard plus some more complex accounting applications. Thank you.